Thank you for your introduction. Still, dear panelist, I will ask you to introduce yourself in a different manner. I always ask my panelists to tell our audience why we should listen to you for another 30 minutes. So give us some fruitful reasons. Why? What is your achievements? And what kind of fruitful insights you want to share with us? Let's go ahead. I'm Anna, head of BD at Cointelegraph Accelerator and upcoming VC. And I have media background, that's why please be prepared for tricky questions. Let's go. Why we should listen to you for another 30 minutes?
Well, if I'm speaking for 30 minutes, something's gone wrong with the panel, first of all. Well, I'm Andrew, VP of Engineering at Block Demon. I've been in the space since 2013, right? So I've done all sorts of things from mining. I've worked on smart contracts. I've been there since some of the early coins that you mentioned earlier, some of the ones that have come and gone. So I've seen pretty much every protocol that's launched and failed. And since starting at Block Demon 6 years ago, I've helped on board over 80 different blockchains. Now you might think, the concept of the infrastructure bubble, right? So I've worked in that space, I've seen that space, I've seen what's worked, I've seen what hasn't worked. So I'm hoping that I can shed some light on, from an infrastructure provider, what works and what doesn't work in the space.
Thank you. Oleg?
I'm Oleg. I think I wouldn't listen to myself, but if you have to stick around for 30 minutes, then probably because I've seen mobile industry from its conception, and I've been very active in it for the last 20 years. I have been in internet since 90s, and that shows my age. And I looked at Bitcoin for the first time in 2011. And I think I'm seeing some parallels and similarities between what happened in mobile and internet and Web3 that are very useful, and for some people, especially younger people, seem like a new news.
Thank you. It's okay, I got mine. Interesting fact about myself, so I got into crypto in 2017, and prior to that I spent over 10 years working for some big Chinese corporates. And I got a great experience that I'm trying to project into the Web3 space. And from 2020 we started like one of the first Web3 funds based in MENA region. And by now we have over 200 portfolio companies. And of course we invested in quite a few infrastructure projects. And about that, we support quite a few ecosystems, like big ecosystems in MENA region. We are official partners for Conflux. We are supporting like ICP a lot. So we've been supporting NEAR. We've even got like another stage, like a few years back, they launched the ecosystem fund for MENA region for NEAR protocol as well. So we tried to dive deep into the infrastructure bubble itself and try to find a solution and what we could do and how to properly grow the ecosystem around.
Thank you, Julian.
Hi, I'm Kelvin. Manage the investment business for Spartan Group. As you might know, Spartan is one of the biggest Web3 investors in Asia. And we're also probably one of the most active investors in the application layer globally. So, yeah, here to add my 2 cents.
Hi, I'm Alex. Glad to be here. I think it works.
Thanks. Yeah, now it works. So why would be this panel interesting? In my opinion, would be the concept around which we are debating. I think it's one of the unique subjects that are part of the discussion here. That is part of the discussion and is like different than the normal standard topics that the crypto conferences are talking about. So a really unique subject. I think we've got some really great people on the panel speaking about different perspectives. Myself, I'm the founder of Fast Horizon Ventures, and we are a VC that tries to get involved very closely in a few projects. We are normally backing just a few projects, but we are helping them through our labs, through the Launchpad, through the acceleration program that we are running, and trying to get very much involved. And I think also like the whole subject and conversation is also part of our thesis moving forward. And after supporting several like infrastructure projects, we are right now on the lookout for exactly what we have been discussing, and we have seen from Oleg in his speech before.
Thank you, Oleg, for your presentation. It was super educative for everyone. I think we have already understanding why we have this problem, why we have this bubble. My question to you. Do you think that this is just the state of the industry, because infrastructure first, jobs second, or it's a real problem? Can you elaborate on the status of this industry?
I think it's a natural development. Every single industry that I named, starting from Industrial Revolution, radio, TV, mobile, internet, always starts with infrastructure investment, and then it flips into consumer. I think we have a blessing and a curse also in Web3. The blessing is all of this infrastructure, by and large, is decentralized and permissionless, which means that consumer crypto is going to take a lot less time to become dominant, because in internet, because of infrastructure being centralized and projects needing to have API keys, permissions, etc., there were a lot of attempts to build genius stuff, like, again, I'm going to show my age. There was Trillion, a project that allowed you to combine every single messenger, ICQ Messenger, BlackBerry Messenger, Yahoo Messenger, MSN Messenger, into one interface. They got to tens of millions of users, and guess what? Yahoo shut down the API access, then MSN. In Web3 world, that is inherently impossible. So aggregation and developing consumer propositions that abstract all complexity in Web3 is going to happen a lot faster. And the curse is we had a fantastic run, bull, bear, and largely it was driven by layer 1s and layer 2s. And the number of investors and capital allocators is so high that I can see a lot of them continuing to write checks for absolutely crazy infrastructure ideas. So that will take some time, I think, to, for the penny to drop, but it's inevitable that it will.
Julia, do you have something?
So I just want to say that Alec actually explained it quite well in the previous presentation by the history itself. And of course, it's kind of organic period that we experience right now. And it's what is supposed to happen, because when we started from the infrastructure, even myself, and I remember like 1 year ago, most of the investors we spoke with, they're like 90% more of them, they said like, we are investing in infrastructure. And because there were so many new narratives within the infrastructure itself, like I remember this boom around ZK rollups and like multiple middleware solutions. But overall right now we are in the period of time then it's really, really hard to find a new narrative within the infrastructure itself. So it's like FHE, multiple technologies, first of all, it's still experimental, most of them, and there is no proof and no traction. But what people require, they require to see the proof of concept, that it works, that you have users, that you got an experience, and that people need exactly the technology that's being built during this period of time. And I believe that what happened even recently, like, the big sign was that A16Z announced 800 million fund to invest in applications only. So then like most of the investors just realized maybe that's enough for us to invest in infrastructure itself, and maybe we need to focus on how we're going to engage all these users. It doesn't matter, like people are talking about retail, people are talking about like institutional players, it all works as long as you see the gateway and you understand how to get them engaged. That's why, like, the latest we try to invest was like a sector-specific blockchain, at least. Then you're looking from the end user perspective, you understand what kind of sector you want to target, and then you build the infrastructure for these users. So that might make sense. And then, like, I believe right now, most of the investors already transitioned from the infrastructure to the application layer itself.
Oleg and Julia touched the topic about investments that investors just support infrastructure. Kelvin, can you elaborate a bit on how the situation right now in 2024, you vote with money and people reach you and ask you to help, to support. So let us know about DApp's investment status so far.
Yeah, so we've been sort of investing. I mean, we don't just invest in dApps, we also do infrastructure investments, but we've been making infrastructure investments since 2017, right? And back in the day, when CryptoKitties sort of crashed Ethereum, the Ethereum network, you can argue that the infrastructure wasn't ready, right? But fast forward 7 years, you've got chains that can do tens of thousands of transactions per second. That is really not such a big problem anymore, right? And oftentimes, we would get pitches from founders saying, I've got this new chain that can now do whatever, 1 million transactions per second. Frankly, we don't care anymore, right? Because we think that the tech is sufficient, the infrastructure is sufficient, and frankly, the tech is not so differentiated anymore, right? Oftentimes when we look at infrastructure investments, if we do come across them, the key thing we look out for is, what applications are building on you, right? So it's not the tech, it's more the BD, right? Who's using your tech? Because if no one is using it, then it's worthless, right? So we have instead been spending a lot of time at the application layer, because if we don't have the hundreds of millions of users, billions of users, eventually all of this infrastructure is going to be worthless anyway, right? The problem for the industry is that if you talk to most VCs, probably 75% of their investments are infrastructure investments, right? Nobody wants to make investments at the application layer because it is too risky, right? And the reason it's too risky is because when you do an infrastructure project, these projects can raise tens, hundreds of millions, right? And that almost guarantees that they will get a big exchange listing, right? And if they get a big exchange listing, these VCs will get exits, right? Whereas if you make an investment in a dApp, if they can't raise the next round, the investment goes to zero, the VCs don't get their returns and exit, right? That's the reality of the industry, right? So, and the hit rate obviously for at the application layer is very low. The failure rate is very high, right? And so nobody dares to make the investment. I think the last time that we saw the big investment wave was back in 2020. You had the DeFi wave, and we had a bunch of applications. And in 2021, obviously we had the gaming wave, and a lot of money came in. So this cycle, I think for that kind of capital to come in, we need to see a killer app, right, happening all over again. If we don't see that, then I think we're going to have a very tough time the next time the bear market comes along, because we will still not have users, we'll still not have killer apps, and then you've got all of these applications but no users, and that's going to be a big problem.
Do you have any killer app in your mind right now?
Any killer apps?
Yeah. Can you predict? Can we make some bets?
Well, I think there are apps that have users, but I think the problem at the moment is that everybody is trying to sort of do it the super growth way, right? So whether it's friend tech or whatever, they try to do it with heavy incentivization. And I actually think that this, Web3 obviously is all about incentivization, but I think if you over-incentivize, like you see in the case of, even back in the days of Axie Infinity or StepN, or more recently FriendTech, you get a kind of user, but it may not be the user that you want. It's not users that stick around, right? They're going to mine for your coin, and then they're going to sell your coin, they're going to make some money, but they're not going to stick around, right? So I think over-incentivization is actually the wrong strategy, right? Because you get the wrong users. I think you might need to incentivize a little bit just to get people to test the app, because the UI is difficult, but really the product should be good enough to succeed on its own without too much incentivization. So I think today we have some of that.
Do we have any tone without some? No.
Yeah.
Thank you, Kelvin.
So I just wanted to add, mentioned, like last cycle, lots of investors invested in infrastructure mainly because, the project could raise like millions and millions of dollars and launch on
top tier exchange and on a very high valuation, but it doesn't work any longer because during the bear market, we just realized that there is no liquidity at the market to absorb these like billions of dollars valuations. So even from the investment perspective, it doesn't make real sense. So right now, basically, like investing in infrastructure becoming more risky than investing in a kind of high quality application with a certain amount of users with a proof of concept that it works.
Alex, I know that you've been pretty active in infra for the past at least 2 years. How do you adjust your narrative? How do you adjust your investment behavior?
Yeah, so I think like everybody does now, we are also adapting our strategy right now. We've been very active in the space. It was also one of the, I think after DeFi, infrastructure was the second most performant space, and because it made sense, because the infrastructure was not developed by the time. And I think even the fact that we have so many infrastructure projects is a sign that infrastructure is getting in the right direction. So for instance, like deploying a chain a few years ago would have been insanely difficult. Right now, deploying a chain is a matter of a few clicks. That it's, I would say, a good sign that we are heading in the right direction with like setting up the basis and building up on the things that other teams have been building. And I think this is like the good thing of a bubble, because a lot of like the teams, a lot of like the companies are building some good things that are going to be really helpful for the teams that are coming afterwards. And on our side, we are also right now taking a close look, searching for some good applications. Again, we are like working very close to the teams that we are incubating on our side. And part of our strategy is to try to analyze the projects from the basis of, is it really something meaningful, and if it has like long-term a value proposition for the users.
Thank you. Yeah. Andrew, you represent infrastructure. First funny question, is it true that it's easy to raise money? Second question, you provide infrastructure for the dApps. How you adjust your strategy, how you adjust your go-to-market and your product proposition?
Yeah, I mean, to answer the first question, the sheer number of protocols that come to us to offer support, right, to bring them onto the platform shows that it's definitely easy enough to raise money, right? Otherwise, we would have a very tough business. That being said, you know, there's a high bar to quality of what we would onboard, right? Sometimes money talks, right? So if people, you know, come to us and they really want to be on our platform, you know, we'll figure it out. But there are things that we'll just refuse as well. It just doesn't meet the bar of quality or the team or, you know, the type of tech that they're trying to launch. And we've often seen over the years that some protocols, they might have raised a load of money, they go to market, and then it's crickets, there's no one using the chain, or it just does not work. And people like us have to, you know, try and keep that thing running. And, you know, sometimes they want our feedback, sometimes they don't, right? So that was the first question. What was the second one, sorry?
The second one, you produce infrastructure. So how do you adjust your product strategy?
Right. So the thing for us is, right, we're only going to onboard something if there's a customer for it, right? So we're not inventing any blockchains. We're very much, you know, that base layer railroad, as you put it earlier, right? And we often think of ourselves like that. It's not our responsibility to build the trains and find the passengers. You know, that's up to the application layer. It's up to the, you know, the protocol as well to, you know, attract developers or you know, people who want to build on it. So our product strategy is really to offer the most reliable, you know, globally decentralized infrastructure across all different providers. You know, depending on the protocol as well that we onboard, you know, you're going to have to get really into the weeds on like what sort of servers you require, what sort of networking do you require. So, you know, our business is basically built on, you know, trying to offer infrastructure at scale. We don't choose or decide who's going to build on that infrastructure. It's very much for the project. And something that we learned a long time ago is the last thing a blockchain is going to do is turn off their servers. So, you know, it's a relatively good business model for us as long as there's a pipeline of interesting, you know, infrastructure companies. But the other thing as well is, you know, we can run servers that have very little traffic because the network or the protocol has not attracted developers, it has not attracted users. So, you know, we've turned off more chains probably than we've onboarded. So.
Thank you. Kelvin mentioned an interesting point that over-incentivization is a wrong strategy to attract users for the long term. Can you share your insights of healthy long-term strategies, and please be more specific, name some dApps that you like and you would love to scale their experience?
Is the question for you? Well, I think for all of the criticisms, right, of the airdrop campaigns that have been done by various layer ones and layer twos, I think some of them at least have been, relatively successful, right, in helping to bootstrap TVL. I think where we see the over-incentivization becoming a problem are those where they actually just purely incentivize short-term TVL, right? So whether it's sort of Blast network, or it's some of these BTC L2s or whatever, or even some of the applications like FriendTag, when you over-incentivize, it can bring short-term usage, but then, like I said, you lose, you don't get the users that you want. But by and large, I think many of the other layer ones that have, and even Uniswap, right, where they have incentivized, but done it in a way that's not excessive, then we tend to see, more sustainable usage, basically. But at the end of the day, like I said, what's most important is the product has to be good, right? If the product is good, then you end up with users one way or another. And if you look at the case of Sweatcoin, for instance, they also do a bit of incentivization, but it's minimal. It's minimal, but you can continue to see very steady user growth over time. So it just tells you about the product, versus short-term incentives.
Thank you. Hope we have some founders and they can take your advices.
If I may, I think one of the biggest issues, Kelvin, that kind of drives this incentivization is everyone is just trying to make it really quick. And if you want to have flash in the pan and massive valuation, the fastest thing to do is to basically build a Ponzi and attract an awful lot of attention and huge queue outside that effectively pays for those that are already in. The trouble is that it inevitably ends up in a death spiral. So that's how you see that if something really, really flies very, very quickly, it is a big sort of red flag, at least for me, because then it typically means that they have attracted a lot of users that are grinders that are there to just basically reap all the incentives and then move on to the next project. Our choice has always been, rather than driving crazy amount of incentives, let's focus on the new users who are not grinders, who are not expecting all of these crazy APYs and crazy level of rewards. Because let's face it, we are tokenizing physical activity. How much are people earning from physical activity right now? Zero. Whatever we give them is infinitely more than the alternative that is available to them. And our goal is to gradually increase the value of physical activity rather than make it go to the moon and then go absolutely nowhere. We've been building this for 10 years. We know how to gradually deliver this, and we know that the path is not by making flash in the pan and kind of really, really rapid rise and decline.
There is one thing I want to add is before incentivizing users, you need to understand who are your real users. So you need to figure out who is your targeted audience, because unfortunately most of the projects, they just, they incentivize all these airdrop hunters and people who are there just for the quick money grab, that's it. So, but if you're building the proper product, the first thing you need to care about is like who are your users, the real users. So these users, they will be incentivized, but at the same time, they will test your product, they will get engaged, and they will keep staying, and they will keep doing some activity within the product that you're building. This is the first thing. The second thing is product market fit and the go-to-market strategy, because lots of projects, they are forgetting about developing the product and getting like a constant updates. Even like with Uniswap, and we experienced V1, V2, V3. So that is the case because you constantly evolving, you constantly providing more features to entertain your users.
So that's why, like, even though you were incentivized initially, you're there, you keep staying for the product itself afterwards. And that is, of course, quite important while onboarding the users in the space, I guess. Yes,
yeah, I think another example of how gamification and over incentivizing people was not going in the right direction was the gaming space, and I think this is why like the gaming industry in the Web3 space didn't perform that well. And I think also over incentivizing in a project is also something that will be felt very, very strongly as a very big burden on the project. And by doing this bad, I think the projects are going to simply not be able to sustain everything. And I think good projects that have done this in the good way are here also, like from the past cycles. Like Uniswap is an example of a project that has done this in the right way. I think for the Sweat team, I think they've managed to do this in order to onboard people from the Web2 space. I think they are a good example as well. And yeah, I think this is something very, very important in order to like really don't do this bad, because this is going to really have some big impact.
And one important thing I will say is financial economy and financial projection, because lots of projects, they don't understand how much money they're going to spend on incentivizing the users. And that, of course, it finally affects the whole token economy if it comes to the token launch.
Yeah, I can't agree more. We've been approached over the last 3 weeks by several tappers.
Yeah.
They've got token emissions going through the roof. They don't know what to do with their token economics. They would love to list, but they don't know how they can do it, and they're trying to figure out how they can earn anything from these massive user bases that they were able to build. I'm actually really excited that 3 people on this panel are capital allocators, because I think that if we want to have more consumer dApps, one of the actually responsibilities is on capital allocators, because the history of internet shows that when big VCs started saying, we care about active users, show us active users, talk about active users, then founders came, and these projects or these businesses started to emerge. If you guys don't, then what happens is that founders, and I've met plenty of them, they say that, you know what, I don't want to build a dApp because I can't raise money for it. But if I call it layer 1, layer 2, I can. So if they want to build, they are not doing potentially what they would prefer to do, but they're going where they can raise money. And I think it's a sort of chicken and egg. I don't know what needs to start, but you will see a lot more pitches from dApps if you're starting to talk about active users. And let me address sort of an elephant in the room, which is a lot of people are pushing back on active users saying, oh my God, you can't separate bots from real people. The only issue that we have is we just haven't really paid enough attention to it. It's just a question of focus. I can guarantee you, if we, for example, and our team had to address it, within a couple of months, we would have heuristics and models that would allow us to do it with really, really big precision.
Basically, it's interesting. Then we have been speaking to multiple applications recently. I always have 2 questions. Like, first of all, is like, do you have on-chain users? How can you prove that those users are real users? Is number 1 question. The other question is like, geographically, where your users are from, because it's really cheap and easy to get some users from India, Pakistan, and all these like undeveloped countries, but like try to grab users from the US, from Europe, because it's all about like how much your users are willing to spend within the application, because like as you mentioned, all these clickers, as I know, the average money they spend within the app is like $20. And it's really hard to build like the proper business is if your users are spending $10, $20 within the application.
Consumers, users. In Web2, we've seen dramatic growth of users in social networks. Facebook gained 1 million within 6 years. Instagram gained 1 million users within 1 year. TikTok gained 1 million users within 6 months. This is Web2 figures, right? We still dream about those figures, still. Web3. Guys, where are we waiting for yet another 1 million, 1 billion users application? What kind of dApps can attract this amount of users? What is your prediction? Investment is kind of betting. Still, you have access to research. We have addressable. Thank you for your marketing research. So what is your forecast, maybe bet, for another disruptive dApp?
Maybe I can start first. So increasingly, when we look at Web3 applications, we increasingly ask ourselves the question of, how is this better than a Web2 application, right? So if you're building a new social media, let's say similar to whatever Twitter or Facebook or LinkedIn, is it really a better product? I mean, what are you introducing here that these existing Web2 apps don't already have, right? Because if they already have those features and they already have the network effects, then it's unlikely you're going to take users away from them because you don't have the network effects, right? So if you're going to compete with them, you have to introduce something that they don't have or they can't have, right? So I think a lot of founders sort of like to come and pitch, say, oh, we're going to be the next Web3 Twitter or whatever it is. But all of those models have failed because they failed to introduce something that was unique and different, right? So I think it's going to be better on the Web2 current Web2 apps, right? Whether it's a social media platform or it's a game or it's even DeFi protocol, it's got to be better than what we currently have in existence. The second thing is, I guess the assuming that this the speed of transactions, right? The infrastructure problem is no longer an issue, right? It may have been an issue in the past, but I think we're comfortable that that is no longer such a big blocker. And then the other question is, how easy is it for these users to onboard, right? Because with Web3, you need a wallet, right? And current wallet solutions are still not optimal. Again, here I think Sweatcoin has done a pretty good job, and maybe to a certain extent Telegram as well, right? In terms of making the wallet interface so easy for Web2 users who are not used to seed phrases and so on and so forth. And I think we need to overcome that and have the apps be better in order to attract that kind of numbers.
Yeah, I might just jump in here. So I've been using pretty much every app since 2013, and most of them are rubbish, like, not gonna lie. If I need to click buttons to earn a token to use your app, you're probably on the wrong track. You want to use an app that basically is viral. I want to use an app that I want to use, you know what I mean? So if I put my product hat on, people should build apps that they want to use, not ones that they think someone's going to keep their attention clicking, you know what I mean? It's like the hamster going around in the wheel, you just keep going round and round and round. So if we're going to build proper apps, you need that virality, you need that network effect, you need something that's going to bring people in and keep them running. And the reality of it is, they don't even need to know blockchains in there. They just want it to feel like a native Web2 product, that they're just clicking buttons and stuff's happening. And if you make it around a token or some incentive, you're probably already losing, right? And that's what we've seen over the last iteration of all the things that pop up and come and go. And you need to feel native, responsive, and blockchain should just be under the hood and you shouldn't even need to know it's there. That's my strong opinion.
So yeah, we see lots of Web2 applications with multiple users, and then if we're talking about the Web3, the major difference is that that there is a wallet integrated within any Web3 application. And the first thing we need to do is to engage all those Web2 users, and that's why the first step is simplify the user experience. Of course, these people, they won't use something like MetaMask because they don't want to care what kind of chains they are operating on. So that's why technology like chain abstraction is becoming so popular, and because overall with Near protocol itself, so you just make your personalized wallet, not these crazy numbers, and then you don't need to care what kind of chain you're operating with. So this is the first step to simplify the user experience. That's why it's becoming easier for all those Web2 users to get engaged in the application. The second step is basically to find your audience. I'm actually quite bullish on any application within the sports activities, I might say. It could be either fitness activities or fans and athletes engagement or whatever, because it's where we see the gap, because it's really hard to get an access. And then if you can simplify this access, if you can simplify the money transfer that is happening within this industry, and it might be the next big thing. And but anyways, like whatever is being built, when you get the proper, it's not an infrastructure, there's like a framework, then you can get users engaged, and then everything is possible to build as long as you know your users. Like I'm quite skeptical about social fi and social applications both, because I mean we have Telegram, we have Instagram, we have like multiple social applications. Why should I go to something which is decentralized? Well, the Farcaster is solving this problem. Otherwise, like there are multiple things have been within Telegram itself, and of course it was quite an interesting strategy by Tom itself, because users don't need to leave the social application where they got used to operating.
Guys, I would love, Alex, please go.
Yeah, so I think there are like two verticals, like one where like Web2 native projects are just integrating Web3 tech, and then they have a big user base already. I think Telegram is an example for that, and Ton. And I'm pretty sure that probably we'll be see a lot more initiatives like this that are going to be able to onboard a lot of more users in the Web3 space. And then I think for the specific Web3 native app that will onboard like 1 billion users, I think that's like a really tough question for like starting from zero to getting 1 billion. I think that's the tough question. But I'm pretty confident that the integration of Web3 tech in other apps, in commonly used application in our day-to-day life, I think that's going to be able to attract a lot of users, and then we'll be not even think about that you're using Web3 tech anymore, I mean, across all these apps.
I really want to add to the framework that you, Kelvin, proposed, which is it needs to be better than Web 2, and I would say that it needs to be 10x better than Web 2. And if you start thinking about what Web 2 is, and I really like the heuristic that Chris Dixon gave us, read, write, own, you can't outright Web 2, right? We need to be thinking about problems and products built around ownership. What can we own in digital space? And this is where Web3 is not going to be 10x, it's going to be 100x. It's infinitely better because you can't own things in Web2 really. You know, the company is kindly giving you permission to do something until they feel otherwise, and then everything's gone. So, like you, Juliet, I'm not very bullish on social fight now, unless all of a sudden Twitter, Facebook, and everyone else is starting to really censor everyone and just cutting accounts. Then all of a sudden Farcaster is going to have massive spike, because at a certain point, if people realize that actually they don't own anything, they, you know, what they said is not, you know, is not theirs, they will start paying attention. But until people get cut out of the banking system or social fi, I think that decentralization of Web2 is not going to be sufficient enough, and we need to be focusing on ownership of something. Everyone is talking about money, but there is more, there is access, right? And we all have keys, we all have access to this and this and this, and actually blockchain is a fantastic place to do that. Data is another area, real world assets. So, you know, ownership is where I believe the, you know, 1 billion app is going to be made. 1 billion
I'm
users.
a bit pessimistic, because the price for the ownership is responsibility, and we can see the lack of the users just because of this simple seed phrase and absence of the third party when you can text and please help me to recover my wallet.
Just don't do that. That's simple as that. I mean, you don't have to do seed phrase and sweat wallet, right? Everyone figured it out. This is a massive barrier, and there's a silly barrier that shouldn't be there. It just needs to go.
Guys, I wish we can dive deeper into different topics. However, we have to wrap it up. Still, we have avenue for the last, not question. I always ask you to promote what kind of contacts do you want to make at this event. We have potential partners, we have potential startups to invest, we have potential clients to work with. So be honest, this is your promo time, and tell our audience what kind of people you want to talk to, projects, startups. Go ahead, last question.
I'll start. So if you've got an app and you think you need to scale to billions of users, you should come and use our services.
Thank you. Shirt, no problem.
If you're a builder, really think of a problem that 1 billion people have and build for that. Don't build another layer 1. That's a preaching. If you're a capital allocator, really start looking at stuff and pitches that tries to bring next billion people from Web 2 into Web 3, because that's where the value is going to be created. Yeah, I think that these are the 2 big asks.
Julia? As an investor, I believe you need to be on top of everything. So that's why it's very important to understand what's happening within the market, what kind of ideas people have. So overall, we are open for any collaborations, suggestions, idea, and we never target anything, because you never know. Maybe there will be the new wave, a new person, the new idea, the new investment happening. So no limitation at all.
Thank you.
Yeah, for us, we're an investor. So if you're a builder and you've got a cool idea and looking to scale, then obviously feel free to reach out. If you are a family office or capital allocator and you want to learn more about Web3, we always welcome you to sort of be part of our family of funds.
On our side, we also want to contribute as much as possible, generally trying to work really, really hard as well alongside the projects that we have on board, and really happy to have a chat and support.
Thank you. Dear audience, please applaud our speakers for sharing insights. And let's roll the panel. Thank you.